every single investment has this one secret ingredient: risk. Yep, it's the one thing you absolutely can't avoid. But what if I told you that understanding risk is the key to unlocking real growth? Today, we're going to demystify it and show you exactly how to build a smarter, more resilient portfolio. So let's get into it.
I mean, we've all heard this before, right? The stock market is a total roller coaster. One day you're soaring, feeling on top of the world, and the next, you're plunging. Those sharp, unpredictable swings can be, well, terrifying, especially when it's your hard-earned money on the line. But here's the thing. What if we could actually understand the mechanics behind this crazy ride? That's our first step to taking back control.
All right, so let's put a name to that roller coaster feeling. We're about to tackle the one thing that seriously spooks new investors and honestly keeps even the pros on their toes, and that's market volatility. At its core, volatility is actually pretty simple. It's really just a measure of how much and how fast a price changes. You can think of it like the market's personality. A calm, steady market, that's low volatility. But a market that's just all over the place with these wild price swings, you remember the 2008 financial crisis or even the start of the pandemic? That is high volatility in action. But these market storms, they come in a few different flavors. So beyond that general volatility, you've got something called liquidity risk. Just imagine this. You need to sell an investment and you need to sell it fast. But there are no buyers, or the only offers you're getting are way, way below what you paid. That's liquidity risk. And then there's company risk. This one is all about the specific business you've put your money into. If a company makes a terrible decision, gets hit with a scandal, or just gets beaten by the competition, its stock can totally plummet even if the rest of the market is doing just fine. So, all of these different kinds of risk bring us to the absolute core equation of investing: risk versus reward. See, every single investment is a trade-off. And to see this in action, let's look at one of the most tempting and, let's be honest, dangerous corners of the market: penny stocks. Okay, picture this. You're checking your portfolio and you see it, plus 50%. In a single day, that is the intoxicating pull of high-risk assets like penny stocks. It's basically the lottery ticket of the stock market, right? That dream of instant wealth that is just so hard to resist. And this captures the double-edged sword perfectly. On one side, you have that thrilling, electrifying possibility of doubling your money overnight. But on the other side is the brutal reality. What goes up that fast can come crashing down even faster, and it can take all of your initial investment with it. So here's the big secret, the real takeaway. You can't eliminate risk. It's just impossible. So the goal isn't to run away from it, it's to understand it, to respect it, and ultimately to make it work for you. And that right there is the difference between pure gambling and smart investing. Okay, so how do we actually manage this risk wisely? Well, the single most powerful tool you have in your toolkit is something called diversification. Now, I know it sounds like a complex, jargony term, but the idea behind it is incredibly simple and super effective. It is your absolute best defense against those market shocks. I mean, this is basically the oldest rule in the book, and for good reason. It boils down to this. When you spread your investments across different kinds of companies and different industries, you're building yourself a safety net. So if one area takes a hit, let's say manufacturing has a really bad quarter, your other investments are there to help cushion the blow. All right, that's enough theory. Let's make this real. What does a diversified portfolio actually look like in practice? Come on, let's build one out. Okay, take a look at this sample breakdown. First, notice the foundation. We've got 40% in a stable sector like banking and another 30% in insurance. These are your anchors, right? They're designed for stability. Then you've got 20% in manufacturing, which is there for some steady growth potential. And see that little 10% slice over there? That's our play money. That's where you can put some of those high-risk, high-reward penny stocks. It's a calculated risk, not just a blind gamble. And to make this even more concrete, let's look at some real examples from the Nigerian market. So you might have a company like Zenith Bank playing the role of that stable anchor, giving you those reliable dividends. Then you could add AIICO to represent that solid insurance slice. And maybe, for growth potential, a company like CHI. See how that works? Each one has a distinct and important job to do, creating a really strong, balanced foundation for your portfolio. So, now we have the what? A diversified portfolio. But that's only half the battle. Now we need the how. And that's all about having the right mindset.
This is where we shift our focus from chasing those quick thrills to playing the long game of building real, lasting wealth.
I want you to think of your investing journey like growing a forest. Seriously. First, you've got to plant the seeds. That just means starting to invest, even if it's with a small amount. Then comes the second step. And honestly, this is probably the hardest part. You have to be patient. When those market storms we talked about roll in, you don't run out and uproot your trees in a panic. No, you trust the process. And then finally, with time, you get to reap the harvest and enjoy the incredible growth that all that patience and consistency created. So, all of this brings us to the final and really the most important question. Look, understanding risk and diversification, those are your tools. Adopting that long-term mindset, that's your map. You have everything you need. The only thing left to ask is this: what seeds are you going to plant today for the future you want to build tomorrow?